righty. Welcome everybody to part 3. This really is where the rubber hits the road, where we go into the actual strategy with checklists and you start to do the work so that you can apply this to your trading on the Gate exchange. Now this will work whether you trade low time frames like the 1 hour or 15-minute, all the way up to weekly charts. As you will have seen from some of my videos that I've been doing about that Bitcoin pullback to, I think it was at 9,800 or whatever it was, that it pulled back to a few weeks back. Please feel free to ask questions. Please do take screenshots as you wish and ask questions as questions come up. Now, if there's anything else that you do want to see or what we do, there is a whole free course there as well. Obviously, the Gate one's there, the recordings are available, and this recording will be no different. But there will also be, if you go to my website, TraderCobb.com, the whole free course and all the other strategies are also available there as well. So first things first, can I just do a quick sound check to make sure you can hear me loud and clear? Okay, excellent, you can hear me. All right, well, and by the way, are you guys following the Gate videos? Like I do them every day. So I do a scan on the Wednesday, this time in 48 hours, so 6 p.m. Australian Eastern Daylight Time, I think it's called. And I also do watch this video. So you need to be following the Gate YouTube page there as well for that and being involved on the platform. Okay, so let's get started without any further ado. Let's start on part 3, as I say. This is where the rubber hits the road. Now, as always, I have to do this, guys, the risk warning and disclaimer. If you do not agree with this, please move on from the webinar now, as this is not, it's not tipping. Yeah, I'm here to train, help, and guide and educate. Question, I watch your YouTube, is the Gate different? Yeah, you've got to follow the Gate YouTube page and follow them on socials, because you'll see, if you follow them on Twitter, you'll see when I post a video like I did today with my watch list, my trading ideas, you'll pick it up there. So make sure you follow Gate on Twitter and make sure you follow them on YouTube, or subscribe and have the notifications on so you know when I publish something there. Okay, so as I say, if you don't agree with the terms here, there's time to read it just now. Please do leave the webinar. Alrighty, so we've gone through part 1. We've talked about the building of the plan, structuring your approach, and getting your hands dirty with planning. You know, this is a business, make no mistake. If you want to be successful at this, and I know you do, you're going to have all the tools by the end of this. It's a matter of making sure that you stick to that plan. A big part of that plan is around planning how you're going to trade, and that can change. It's okay. You'll have the checklists after this particular session. So I do suggest that you take screenshots and you print them out and cover them in, what's that stuff called, contact, that you put in your kids' school books, or you know, your own books, whatever it may be. Part 2, which was last week, we learned the ingredients. We went through all of the individual elements that need to be understood, that we then encapsulate into this trading strategy, okay, which is our part 3, which is tonight. So we've already covered what you need to know. Now it's a blend of bringing that together in a systemized approach with complete structure with those checklists. And that's where this really becomes interesting, because as I've said from the beginning, technical analysis alone is not trading strategy. It's about bringing those certain elements together in a way of which that provides us with some form of opportunity. Now, it's not a crystal ball, no way in the world. What technical analysis and what this trading strategy does is it gives you opportunity. It gives you a systemized approach to be able to enter markets long or short, okay, spot or margin. So obviously if it's spot, you can't go short. So you can trade, you can trade your spot markets as is with these strategies. But it's about bringing it together so that you've got the facility now to be able to find your own trades, enter and exit as you please with a number of different rules. Now you're going to be doing more work than me tonight. And this is why I like part 3. A lot of it is giving you the time to get it right or wrong. And that's why it's really critical for your development to be able to go through this and ask me questions, be involved. If there's something that comes up, please do just ask. I won't say your name. I don't need to say your name, because if you're thinking the question, chances are so too are others. So please get involved. You've got me for the next couple of hours. Let's make this work as best we possibly can for you. Next week, we're going to be covering management of risk, mindset, and progress. And that's a whole other kettle of fish. Do not miss next week, because it is just as important as any of the other sections. So a quick recap of technical analysis. We're going to look at through some of the things that we've already learned, just to sort of, just to sort of take you through a bit of a reminder. Because if you haven't applied yourself with this particular methodology from last week, then it might be a little bit foggy. So we'll refresh you on some of these basics and some of the things that you're going to need to know to move forward. Now, if I have to duck out for a couple of minutes, it's because I've not been very well. Friday, I come down with something, so please have patience, okay? I'm still a bit fatigued, and I will give you all my enthusiasm, passion, and love, because I have rested today. There's no way in the world I was going to miss this, so yeah. If I happen to say I need a 2-minute break, just let me have it. Okay, so let's get started. We're going to assess the trend. Now, this is really, really important. I'll take you back to the basics of how I started, because the benefit of learning from somebody who's been there and done that and made all the mistakes is that I've also got mechanisms that allow me to have simplicity in what I do to remember the things I need to remember. And look, I have made the mistakes. I've sort of suggested that enough times. But on the left-hand side of my laptop when I started, remember the Post-it note? I had this: high, higher low, higher high, higher low, higher high. And that meant it was an uptrend. Just a simple series of higher lows and higher highs. That's all it was. And it's just the last two. You know, you've got to have a higher low and a higher high for you to have an uptrend. The downtrend is also quite simple in the sense that it is just low, lower high, lower low, lower high. Oops. And that is a downtrend. Okay. Now, in this particular section, in this part 3, we're focusing on the right-hand side of the chart only. Okay, which means we're going to focus on the most recent low. Sorry, I should start again. The most recent low, which is here, to the last low. And do we have a lower high and lower low? Here's a lower high, here's a lower low, here's a lower high, here's a lower low. So yes, in this case, we have a downtrend. Over the left-hand side, we've got to look at the ups and downs, the higher lows and higher highs. Okay, so we're just going to keep it really, really simple. We're not going to overcomplicate this. Straightforward stuff. There's no need to overcomplicate things. Don't let your mind run away from you. Oh, why isn't that working? There we go. So if you recall as well, resistance was when we had 2 tests of a specific upper price point. Upper, above. Upper is above us, above price. So test 1, test 2, test 3. Now 2 is the key. 2 touches means it's resistance around a very specific level. It's the ceiling above our heads. Again, I'll use the same language. It's the ceiling above our heads, which is resistance, and support. Test 1, test 2, test 3. Now that's a bit of a bee's dick break. Why a bee's dick? Because how big's a bee's dick? It's not very large. So that's the rule that I've got, and the reason I have it as a bee's dick rule is because you hopefully remember it. So again, support, 2 tests at a specific region below us, the floor for which we walk upon that supports our weight. 2 tests of resistance is above the current level of price. 2 tests of support is below. Again, keeping it very simple. Another one of the rules, also not so much a rule, but just I guess what we say is a rule of thumb. Old resistance can, that's the key word, can. It doesn't mean that it will offer strong support. So as you can see in this case, we have a higher low, a higher high, and a pullback. Now that little candle there is going to, as you learn later on, be an actual cradle trade, which would have, in this case, been profitable. Now that's not the reason that I've got this here, just so happened that it worked out. It's when price breaks above, pulls back in, it acts, or can act, as I say, sorry, it can act as like one of those little trampolines where it can shoot you back up. Why? Because it's supported your weight. The reason when you jump on a trampoline, you get shot back up in the air is because it supports your weight and then it flicks you back up. So that's what I want you to have in your head. I want that trampoline vision in your head. Old support connects new resistance. And when support, so down here, it can often, if it was to do this, act as resistance and drive price lower. Now, this is not a rule. It's a rule as a bonus factor, but this is not a rule that would, just because prices pull back does not mean we're going to sell it or buy it. It's a bonus factor. It's a rule of understanding how markets often work with high probabilities. Moving averages. The 10-period moving average is the black line. Now, it doesn't matter what color you make it. I couldn't care less what color it is, as long as you got the 10 and the 20. And the 10-period is the last 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And that's those 10 candles smoothed out on the price. As you can see in those 10 candles, the momentum's been down, so therefore our moving average has rolled over. Now, the 20-period moving average is not too much more complicated. It is simply just 20 candles going back to somewhere like that. We use the exponential. So I'll cross that out. I got to change. I should really change that slide. The whole point of having the simpler exponential is it doesn't really make too much of a difference. I use exponential, so we may as well use exponential because why not, right? Keep it nice and simple. Don't overcomplicate things. So it's the 10-period exponential moving average and the 20-period exponential moving average that we use, but it's how we use them that's important. And how we use them is for our Cradle Zone, which is the makeup of this entire trading strategy. We have a buy zone. And again, if you didn't take your screenshots in the last event, please do this time. It's the area in and around the rising 10 and 20 period, okay? That's going to make a lot more sense when I visualize that for you and we go through a number of examples. The sell Cradle Zone is the area in and around the 20 period moving average when they're declining, yeah? When they're headed south, when there's a downtrend. Now, I'm going to say as little as possible on these revision points, unless there's questions, because I don't think that more words equates to more understanding. I figure that less words in a clear manner helps you to understand and connect with this better. If there are questions, please do ask. I'm going to let you be my guide here, because as I say, I don't want to overcomplicate these things. We've learned it last week, and I want to make sure that less is more. My whole trading career, well, so I shouldn't say that. The first few years, it certainly wasn't about less is more, but I wouldn't call that a career back then. That was when I started. My career after learning what to do has been around simplifying things. And that's why you'll see on my videos and everything that I do, some of the examples, I haven't taken the signal line off on the MACD. And that's just because I didn't know how. One of my clients showed me and I was like, oh, that makes it even easier. So for me, if there's any information on a chart that is not going to help me to make a decision, I just do not use it. Question. Have I missed that? Oh, no, sorry. 10 and 20 moving average standard on all exchange charts. If you go to exponential moving average, which yes, it is pretty much across all platforms that you can have that indicator, you just need to go into, usually depending on the platform, most platforms will use a version of TradingView, or lots of them do. But no matter what it is, if it's TradingView, there'll be a little cog right up in the left-hand corner of your chart. There'll be, when you click on that cog, it will ask you, the period, or the style, and there's, I think it's called period, or style and settings, whatever it might be. Just make sure that you change that to 10. One is 10 and one is 20. It's very straightforward to do, and I show on some of the charts. Some of the watch list things I do. If you ever have any problems about that, just let us know. Go to the website TraderCobb.com. Excuse me. Excuse me. And just ask that. Yeah, it's just the EMA setting, mate. Very, very simple. Very, very easy. You change it once and usually it saves, so it's not a problem. Cool. We're also looking at convergence. So what I said before about the fact that I've taken the signal line away. See this orange line here? I actually get rid of it. It doesn't help. It doesn't add any benefits, so I just killed it. There's no point in having something that you're not going to use to be decisive. But we're going to talk now about MACD convergence. And if, again, I'm going to use the least amount of words to try and describe it in the most simple way. we've got a high here and we've got a high here. So this is the new higher high, and this was our high back here. Now, what we've got to do is we've got to take high 1, which is our most recent. Okay. And then we've got to compare it to our last high. Now, of course, that's in an uptrend. In a downtrend, just flip it on its head, the low, most recent low to the low prior to that. So in this case, what we're comparing, and get rid of this so it makes it even easier, is this high and this high in price. So price has clearly made a higher high. We can see that, we understand trend, we know what it's done. Don't worry about the higher lows, that doesn't matter. Absolutely no relevance whatsoever. So what we do, and it's much easier when you've got your charts up, is that you can use a crosshair. There it is. Here is our high that coincides with the high above. Drop the crosshair down. Here is the higher high that coincides with this higher high. Now the MACD, would you say it's made a higher high as price has made a higher high? Yes or no? Yeah. Simple as that. Do not overcomplicate this. All right. If price has made a higher high, I want the MACD to make a higher high. If price has made a lower low, I want the MACD to make a lower low. That's it. Keep it really simple, and that's the beauty of this strategy, is that it is simple. Now, if it's not converging, and I always give an example of divergence. So convergence simply means that it's in agreement with price. Price and indicators are in agreement. All right. If we don't have it, so we can clearly see there was a high here, then a higher high, only by a little bit, and then a new higher high here, right? We can see that. We can see the higher highs. Only just, but they're higher highs. If we were to drop it down, especially the last two, because that one doesn't matter so much because it's about the most recent to the last. Drop it down. There we are there. There's our high. Drop it down. There's a higher high. Now it's pretty clear for those of us that can see this, that's not a higher high. So what we have here is we have price pushing to a new higher high, but we do not have the indicators or the MACD. I shouldn't say indicators because it's just the one. We don't have it in agreement with price. Now, if you don't have that, it's quite simple. There is no opportunity. There is no trade. If this is your trigger chart, and trigger chart equals the chart or time frame, that shows the trade the best. Now, I know my handwriting's like doctors, but guess what? That's me. That's why I try and explain things clearly, because my handwriting's terrible. All right, so we're trying to make sure what we want is this. All right, if it doesn't look like this, it doesn't matter, because what's the king rule? What is the biggest rule in all that I've taught so far? Tell me what the biggest number one rule is for you. And it spans across all experience types or levels. If it isn't clear, it's not there. That's right. If it's not clear, it's not there. Spot the dog. Bingo. All right, good. Well done. All right. Big versus small candles. Again, the analogy here, I use a lot of them because they stick. Well, they stick for me anyway. Remember what I said about walking down the street and you see a Labrador? It's a dog. It's not a small dog. It's not a big dog. It's just a dog. But if you see someone walking down the street with a Great Dane, you and your kids and your family go, wow. There's not a time I've ever seen a Great Dane where I've gone, wow, that is a big dog. Or like a Clydesdale horse. I've seen plenty of horses. You see a Clydesdale, you go, gee whiz, that is a bloody big horse. It's when you get that feeling of, yeah, that's definitely big. That's when the candle is too big. Now, it's going to take some experience. And this is one of the things that you're going to be building upon. Now, I can teach you what to look for. I can teach you what to do. I can give you checklists. I can make sure you plan your trades and and it's up to you to trade your plan. I can show you how to manage your risk and correlated risk and all this sort of stuff and drawdown points. I can teach you all of that. That's a starting point. That's the beginning. There's a lot more that you'll pick up, that you'll learn, and depending on how much more you do, as in, if you join our community or if there's other things that you do within our organization, you'll start to pick things up faster and understand things, and you'll make this strategy your own. And that's my objective for you. This is a strategy this is not my own strategy. I've simplified the process of what I was taught, okay? But I've made it my own. And I want you to do the same. I'm not saying change. I'm not saying change anything, because that's not what I'm asking you to do. I have not changed anything. I've taken things away that made me indecisive, that wasn't helping, like the 50 period, the 200 period moving average. I used to have them on the chart. I used to have the RSI. I used to have the signal line and the histogram, but none of these things actually gave me any support. All they did was clutter my brain. And that's why I have since removed those. It's about being clear, and clarity gives decisiveness. Decisiveness gives you the opportunity to actually take action. And we all know that if you don't take action, nothing happens. All right. What's the old saying? There's those that watch what happens, there's those that make things happen, and there's those that wonder what the hell happened. We're the people that are going to make this happen. And it's through our observation that's going to help us with that. So if it's not a big, if you look at the candle, and relative to the last sort of 15 or so candles, because obviously volatility does come in. If we focus on the most recent volatility, we're talking about here to here, right? Something like that. You can see there that the volatility has increased significantly. So I'm not going to look back at these candles and go, oh, this candle's huge compared to those, because they're not relevant anymore. The market's changed. The market's got a bit of legs to it now. That candle, although not a tradable candle, that's not a big candle when you consider the last sort of 10 or 15. And that's my point, is we want to be cognizant of our environment. If you're walking through wild Africa and you're not thinking about lines, and you're just sort of whistling along and crunching through the bush and, looking up at the sky, and there's a lion pride in front of you, you're going to die because your environment's very, very dangerous. When I go fishing and I go down here in Sydney, I'm fine. Like, what I've got to be aware of is just the swell. I've got to make sure that I'm on the right swell, the right tides. I know the weather patterns. If I'm fishing off the rocks, if I go up to the Northern Territory or anywhere in North Queensland or anywhere in the sort of top half of the country here in Australia, I know that I can't go too close to the water. I never take my eyes off the water, because there's crocodiles, and a crocodile will literally hunt you, stalk you, kill you, and eat you. I know that because I'm aware of my environment. I want you to be the same. I want you to be the same when it comes to the market. So the significance of this is that we don't trade on big candles. If the candle doesn't jump out like a big dog, where you go, whoa, that's a big dog, then it is likely it is small enough, and you'll develop your skill set around that further. Okay. Now, all right, what you're going to need to do is you're going to need to have your screenshot monitor thing, your snipping tool, whatever it is, ready for this, because here we're going to go through and I'm going to eventually show you the actual essential rules. Now, when it says critical factors, I should really change the language of this slide, to be fair, to say essentials, because that's what it's going to say on your checklist. These essential factors are all based on price action, bar none. They are all based on price. Don't forget, everything that I do, and this is like, there's another saying that says those that can do and those that can't teach. And I understand the methodology behind that. And unfortunately, for a lot of people in this industry, it is true. It just genuinely is. I can tell you that's not with me. I am a trader, and the fact of the matter is that I have a community of people that are paying me to see what I'm doing, to follow, to see my watch list, to give them little pointers here and there, to watch what I do daily. I do that. Now, we have not lost very many people out of that group, and it's testament to the fact that I actually do trade. I am a trader. So why did I start this business? I have people asking. I want to crush it right now. So again, I build that trust even further. In all honesty, if I hadn't started this business, I'd have a lot more money. I'd have a lot more time. But I walked away from trading for a year back in 2016. Or sorry, yeah, probably midway through 2016. I just got jaded by it. I was diving every day. I was going fishing when the tides went. I was going surfing when I could, and I was raising my daughter. At the time, she was 2. I think she was 2 now. She's 8 now. Ooh, 2. Yeah, that sounds about right. But I was bored, man. Life is not just about making money. And I had, at 31 years old, I was sweet. I didn't have too many problems. I didn't have too many worries. I was a good trader. I had money that was offered to me to manage. I didn't want to. I was pretty set, right? I was pretty set up. I started this business because I got bored. I went out of trading and went into property because I needed something of a challenge. I needed to reinvent myself again because I've been doing this since I was 21. All right, so it does get it did for me get a little bit stale. And don't forget, I'm not in the trading floor with 20 other men and women around me. I'm just doing it by myself. I'm a self guy. I'm sorry, I'm a self-taught, sorry, I won't say self-taught. I've been taught by mentors, but self-made is probably the best way without it sounding too corny. I've done this because I actually find a lot of pleasure in helping other people. And it's a new challenge for me. This online business, holy crap, it is bloody challenging. As is as is proof of last week. I slept most of the weekend because I didn't get to bed before 1:30 in the morning, and I was up at 8 or 7 every morning. It's been a big week. Whew, it's been a big week. Launching a new website, new courses. Oh my goodness. But it's been something that's been a massive challenge for me. There's a huge amount of satisfaction that comes with learning something new. That's why I do this. But I am a real trader. I am trading every day. I'm scanning every day. It doesn't necessarily mean I'll take a trade every day. But everything that I do is based on this. It's based on price. Because anything else is just BS. All right. Everything within this strategy you've already learned. We covered that last week, and you can see what you'll see in this particular segment tonight is that the way that I teach, it's about building that foundational base. It's about teaching you those ingredients individually. It's going to come together tonight, and you'll see what I mean. And I've got 2 other strategies for which I don't teach on these corporate things. This is not a, I've got those, they're mine. All right, they're mine. You can't buy them unless you come to my website and you buy them. And if you do want to do that, you've got a gate discount of 15% anyway. But the bottom line is this: you'll pick those strategies up straight away after doing this because it's the same stuff. All right, you've learned everything you need to learn. Have confidence in that. All right, all the essential factors must be met before we consider trading. Typo. All right, they've got to be met. You cannot change out an essential for a bonus factor and say that'll do. It's the coming together of these that are really, really important. You'll have trades set up that meet your essential factors. So why do we need bonus factors? Well, it's to give you a measuring system to help to increase the probability. Now, you might have a trade where you go, oh, it just met all the essentials, but there's no bonus factors. It'll be a profitable trade. You'll also have a trade that might take on all the essentials plus 4 bonus factors, and it's a losing trade. Don't forget, we can't control what the market does. This is a measuring system so that you've got something that you can measure and manage. If you're doing it willy-nilly, then you can't learn. If we're doing it based on a systematic approach with bonus factors, including their essential factors, then we can start to have the data that we can, scan over or scour over every 10 trades, 20 trades, 30 trades, 50 trades, 100 trades, and see, okay, well, me as an individual, am I better off focusing on the trades that have all the essentials plus this particular bonus factor and this particular? You've got the data where you can break it down and see who you are as a trader. Was the last screen a screenshot? Look, I'll jump back if you would like to. I mean, look, it's not going to hurt for you to take it. Let me just take that screenshot for sure. It's actually not that critical, but it's not going to hurt to do so because there are some little points in there that are worthwhile having. So yeah, they're here to help us to give that measuring system to have us in the position whereby we know what we're doing. As I said, you cannot replace an essential factor with a bonus factor. You cannot replace an essential factor with 6 bonus factors. If you do not have all the essentials, you do not even bother wasting your time on the bonus factors. Take the screenshot of this too as well, just to make sure that you've got it all. Our essential factors, they're our first focus. Now, This is where you should take a screenshot. Please take a screenshot of this and let me know when you have, please, because this is the essential. Well, these are the essentials for this strategy. All right, cool. Everyone got the screenshot there? I don't want to move on because until I know, because obviously I've been harping on about how important the essential factors are. Here they bloody well are. You better get your hands on them, and please print it. I've actually printed them out tonight as well because they were slightly in a different order. I've since put them in the correct order, which you've got. I mean, they were always correct on your screen, but I printed mine out a long time ago, and I've changed them into more of an order of significance, and not so much significance because you've got to have them all, but in terms of sort of saving time. So first things first, price must be trending on the trigger chart, which is the time frame we find the trade that sets up best, and the next high time frame. If we don't have that, there's no point looking for the next factor, is there? There's just no point. Moving averages must be in the correct order on the trigger chart. So you've got to have it both sides. You've got to have moving averages in the correct order on the next higher time frame. So we've got trending. Sorry, I'm going to draw now. Rule number one, trend. Rule number two, trigger chart, moving averages in the correct order. In an uptrend, that's a 10 period above the 20. In a downtrend, that's a 20 above the 10. Moving averages must also be in that correct order on the next higher time frame. So in our first three rules, we can eliminate at least 80 to 90% of the charts. It's about scanning the market quickly, efficiently, and effectively. Rule number four, the price, must be in the cradle zone, because we're going to be taking the trade based off of a singular candle. That's going to be our entry. Our stop loss may be off of that singular candle. It could also be off of a candle prior, and that will make more sense in a little while. A candle that is small must be present in the cradle zone, either bullish or bearish, obviously depending on the trend, which will come from these three rules. Number six, the trigger chart must be converging. Now, personally, I like to have the trigger chart and at least the next higher time frame converging as well. I haven't put that in as an essential factor because it's my preference, and I'm here to teach you, and I want you to start taking trades and not being overly picky. Why? Because I also suggest that you start your trading with a smaller amount of money, start risking lower amounts to start off with. From there, as your confidence grows, as your experience grows, then you can start to bring some more things in, start to increase the size of the trade. But the first things first, you've got to start doing. Just do it with smaller amounts so that the emotional experience is one that's positive regardless whether you win or lose. But I personally prefer trigger chart and the next higher time frame. So I kind of tie in trigger chart with that one. Oh, sorry, my mistake. That one. Okay, something similar like that. You don't have to, but I'm here, may as well tell you, that's what I do. Number seven, nothing in the way of achieving a target or targets for the trade, looking at the higher time frame. So again, nothing in the way of resistance if we're long, or support if we're short, of getting in the way of us achieving that first target, which is to minimize our risk by closing half the trade. That will be covered more in part 4. And to enter the trade, so number 8, rule number 8, it's not so much a rule, it's a guide. So if we're in an uptrend, we've got to break up through the high of that small bullish candle. If we're going to go short, it's got to break the low of that particular candle. And don't worry, this will all become much more clear as we go. Here is a beautiful, now I remember this so well, this trade. This was, yeah, well, there you go. My first big, I shouldn't say big because it wasn't that big. I came into crypto in July of 2017. I put a little bit of money in, a little bit for me, and started buying it because I got to put skin in the game to learn something. Okay. Then we were up at what, 5,000 something or other up here, and I was saying, you know, I'm looking for a pullback, and I had a round number A question: does break mean the opening of the next candle on the tree? It means it's got to break the high of the candle. I'll answer that question in just a moment when I show you. Or I'll show it to you in a visual sense. Hence the word show. But I had my Fibonacci's drawn in. I had old resistance, which was at 3,000. I had a 61.8% fib, and I went to bed that night. And I went to bed with my first order being somewhere around something like here, 3,150. Then I had three, and I staggered my orders, 3,050, and then 3,010. So I bought a bunch here. I bought a bunch more here. I bought a bunch more here. By the time I woke up, I was up about 15%, and away we went. And the rest was history. That was my first proper order after I'd spent a couple of months learning about the market. That was in September 15, as you can see by the date down here. Then we said this, look, what happened there? What happened? Look at that chart, look at that line, what happened? Think rule number one. What have we got there? Think of the post-it notes. Higher high. Yep. So here's a higher low. Oops. And as it broke up through here, we had a higher high. Now, that doesn't mean there was a trade there. We kept on pushing, didn't we? We pushed up, and here's our higher high, and then there's our pullback. So this was potentially a higher low. This was my first margin trade, and at the time I could only use, I think it was what's the one that's been in trouble, BitMEX? It was, yeah, it wasn't much good back then. I haven't used it for a long time since. I took this trade, and here was my entry. So regarding rule 8, here's what I mean by breaking the high of the candle. That's the high. If you think back to last week, we talked about the anatomy of a candlestick. That's the high. That's the low. The fact that it's green means that it's bullish. Sorry, I shouldn't say bullish. The fact that it's green means that it closed higher than where it opened. So once that candle closed, because the candle has to close. So that's a daily candle. When the daily closed, for me at the moment, that's 11 a.m. in the morning. That's also when the next daily candle opens. I have my order as it breaks. So let's say the high of that candle. Oops, what am I doing? Equals, what are we saying? Let's say 4350. So my entry, and there'll be more on this, so don't freak if you don't get this. It will be oops, I am not drunk, I promise. 5-1, writing things backwards. So as it breaks the high of that candle, because the high was at 4350, meaning my entry is at 4351. So as soon as this next candle opened and then it eventually broke up through that level, I was triggered into my position. I was long. My stop loss was underneath here, and we'll look at this in more detail as we go. I just want to make sure that the basis of Cradle, the breaking, especially rule 8, the breaking of the high, that's understood. Do we understand that, yes or no? Good as gold. Okay, great. Okay, cool. That's what I want. Clear is what I want. Clear, clear, clear. I'll keep at it. Let's keep moving. Again, I'm trying to explain things and answer questions whilst also not confusing you with jargon, not confusing you with long-winded answers, because a lot of this, it just is what it is, guys. And it's up to me as my role as the educator to make sure that there's clarity in what I say, and it's up to you to be the judge of that clarity. If I need to go over it 6 times for you to get it, I will do that. I'm not bothered. Okay, so now we're going to look at checking. Oops, sorry. We're going to look at checking time frames. Now, I don't have a time frame up here per se. It does not matter. But let's just, because a chart's a chart. It doesn't matter what the time frame is. It doesn't matter what the product is. A chart's a chart. Let's just say for the fun of it, this is the 4 hour. And therefore, what would be our next higher time frame? What would be our T1? if our trigger chart, which is the time frame we find the trade on, T equals 4 hour, what would our next time frame be? Yep, I'll see a couple more people going first. We work to a multiple of 2, and everyone's getting that right, which means that this would be the 8. Oh, the 8 hour. Okay, and this is what I mean by checking time frame trends. If you consider rule 1 being that we've got to have a trend on both the trigger chart and the next high time frame, well, there it is, lower high, lower low. This is a downtrend, easy peasy. On the 8 hour, lower high, lower low, we have both trends in agreement. Question, is trigger always the smallest, and how do you decide? Maybe I didn't get this from before. The trigger is the time frame for which the trade sets up on. No, it doesn't need to be the smallest time frame. It's, you work from what you work from what represents the opportunity, i.e. the strategy, the best. So if it's the 4 hour that it sets up where all the essentials are met, or there's a little bearish candle on the Cradle Zone, it doesn't even need to be all the essentials at this point, because we've got to go through the essentials, right? We need the next high time frame to accomplish that. If the 4 hour has a small bearish candle on the Cradle Zone in a downtrend with moving averages in the correct order, like we see right here, then we go, okay, we got the basis for it. By rule number 2, by rule 1, we're also looking at the trend on our next higher time frame. By rule 2, we want to make sure that we've got the moving averages in the correct order. Rule 3, it needs to be in the correct order on the next higher time frame. And the next higher time frame from 4 as a multiple of 2 is going to be 8. If it was 8, it would be 16. If it was 1, it would be 2. Got it. Beauty. Yeah, you start with wherever it sets up and provides you the best opportunity, potentially, you move up. So the way the rules are designed is that you're kind of doing both at the same time. It's the way I set my charts up, and I use my TradingView charts, and I tend to scan there. And then what I'll do is I'll move across to my exchange and replicate what I find, because I like to have my charts all in the same place. Now, Wednesday evening, I believe we're going to be able to do this on platform, the scanning element of this series and this month that I'm doing with Gate, where I can actually show you how I do the scans. And if you look on today's video on their YouTube page, you'll see a bit of that process, and it will help to solidify the understanding there as well. So I do encourage you to do that, because the scans are about tying this together. The watch lists are about tying it together and pointing you in the right direction. So I'm going to ask you this question. All right, I'm going to ask you this question. We've got the daily as our trigger chart. We've got the 2-day as our T1. I don't care if we get T1, it doesn't really matter. We're just going on a multiple of 2. Are they both in the correct order? Yes or no? Trend-wise. Yeah. Second question. So we've got rule number 1. Let's do the. I usually don't go through the actual checklist in this one, but we may as well, right? Price must be trending on the trigger chart and the next higher time frame. That is rule number 1. We can tick that. Rule number 2. Moving averages must be in the correct order on the trigger chart. So the 10 above the 20? Well, I can say yep, because the 10, that's the black line, the 20. Yep, they're in the correct order. Number 3, moving averages must be in the correct order on the next higher time frame. Are they in the correct order on the 2-day? Yes or no? Yep. Rule number 3. Oh, sorry, rule number 4. Entry candle must be in the Cradle Zone. Now, this is on you. I'm not going to give any hints here. Entry candle, and don't forget the entry candle is based on our Still can't get the hang of this bloody pencil thing. On our trigger chart. So is the candle in or around that cradle zone? Yep. Rule number 5. Is the candle small? Is that candle, and when I say that candle, I mean, because we work on the right-hand side, I mean that green candle right there. Is that, does that look like a Great Dane walking down the street? Does it? Remember, if it's not clearly big, it's small. No Great Dane. Bingo. Okay, cool. So we can tick that. Sorry, I've forgotten to. Oh, look, we're looking at this candle across the last 10 to 15. So if you look at this chart right here as it is, that's a big candle, isn't it? We know that. That's clearly a big dog. That's pretty big. That's pretty big. It's not so big. That's a big one over here. That doesn't count though, right? Because we're looking at the most recent. If you're sitting there on the fence, especially when you start, I'd say just take it. But remember, I say to take it, but I say to keep it on small risk because you're here to learn. Now, as much as, when you do your driving test, you're doing your learn, you sit in the car with the man or woman who's teaching you. They don't want you to crash. That's why they too have brake pedals and their hand on the handbrake. You ever notice that? They've actually got brake pedals and accelerator. They will control the car. Now, I can't control the car here. So that's why we take that risk away. We basically put you in the car on a track where there's padded walls all around and there is not a car within sight. You're literally the only one there, and you've got to govern on the engine. You can't go above 20 kilometers an hour. That's what I'm trying to get you to understand. It's best that you do and learn from the doing, but you've got to follow the whole process, which is covered next week as well. We do a lot more in part 4 as well to manage that process. All right. So we go to, we've already established 3 is a tick. 4, which is the entry candle in the cradle zone, is a tick. We're on 5 right now, and from what I'm understanding from what you're saying to me, this is your trade, not mine. 5, yeah, we can tick that because it is not too much of a big dog. Now, rule number 6, the trigger chart. Is the MACD converging? Now, let me show you what the highs are. Here's our clear high, and here's our last clear high. Your call. Are we convergent? Yes or no? On the MACD. Beauty. So yes, rule number 6. Oh, God damn it. Yeah, we can tick that one. Rule number 7, is there anything in the way of us achieving our targets? Well, I can tell you right now, because of the data that we have, we do not have enough, we don't have the ability to scroll in and scroll out and see if there's any major resistance. From what I can see and what you can see, there is nothing in the way. There is no 2 tests like right here where price would hit that and fall away from. There is nothing in the way of us achieving our first target, which is 1 to 1. Okay. Possible support. There's definitely support here, which is our stop supported by it. Yep, I agree with that. So we can tick number 7. And number 8, all number 8 is saying is, okay, look, we've got a live candle in play right now, don't we? That green candle in question, it's not closed. We know it's not closed because there's not another little opening next to it. Rule number 8 is just telling us that if that candle opens, we're going to enter as it breaks the high. 8 is not so much needing to be ticked. Excuse me. 8 is more a rule of entry. Was that difficult? That's a question for you. Now, what I want you to understand is this. You just went through the entire checklist for this strategy. You just did it. Everything, every single part of everything that I've taught you has been culminated to come to this point. Now, if it is a little bit fucking, oh, excuse me, that just totally slipped out. I'm a fisherman and a builder's son, a man of the sea, I'm a pirate. Excuse my French. If it was a little bit complex and a little bit difficult, you'll get used to it. Because see this? That's called a checklist. You print that out. You have it with you. There's a reason why I don't want you to just learn all the ingredients and then go and have a go. It's not about that. It's about understanding how they come together and understanding that as I've taught each of these different 8 rules individually, in detail, helping you to understand the underlying reason for it so you get it. This should be the easier part because you're familiar now, and it's just a matter of doing this again and again and again and again. And that's why it works. And that's why it worked for me, because I didn't overcomplicate things and I wrote it all down. There's a trade there. And by the way, I can remember this so well. This was early 2019, I think. Oh, it says it. Yeah, what's that? That's 2019. Yeah, I think this might have been my second or third trade of 2019. I was back from Noosa. First trade was that Litecoin Bitcoin one. You'll see that in a bit. And that was a loss. This one was a very good profit. Binance until July was my biggest profit. Until it was actually until June when the market started to run hard again. And this was against Bitcoin and a spot market. So it's, you can go and do this. You can trade this on Gate. It's simple Simon stuff, but it just did phenomenally well. And it ran. I mean, at this time, the price of Binance, if you were on Tether, was about $6.46, and I ran it all the way up to 18 something, but I did it spot against Bitcoin. So very, very good trade. Not that that actually matters. The outcome doesn't matter. It's the fact that we understand that we're following a set of rules. Now, by the way, do you all have, I'm not sure if you've got 2 screens or if you've got a printer nearby, or are you easily able to access your lists right now? Because you're going to need to. Okay, if you can't, please do something about that, because your involvement's about to go through the roof. Let's go through this one. I normally don't at this point, but hey, we're good with time. Let's do it. So, rule number 1. Now, I'm not going to tell you on this one. All right, I'm going to ask you, and I'm going to let you tick it or cross it. And at the end of it, I want to know whether you would have taken the trade or not, or whether it fit the rules or not, more importantly. So, one thing I will do is that I will tell you, this is our trigger chart. Oh, for goodness sakes. This is our trigger chart, 240. Rule number 1, price must be trending on trigger chart and the next high time frame. Do we have trends on the 4-hour and the 8-hour? I'm not asking you to tell me yes or no. I'm asking you to make the decision and tick it based on what we've learned so far. And don't forget, not every example is going to be easy. Not every example is going to be right. I'm not saying that as a curveball. I'm just saying, think about that. And don't forget, what's the most important rule? If it's not clear, it's not there. And if it's not clear to you, no problem. Hands up in the air, own it. It's fine. You will learn. So first one, price must be trending on the trigger chart and the next higher time frame. Make your decision. Number 2, moving averages must be in the correct order on our trigger chart. Make a decision. Number 3, moving averages must be in the correct order on the next high time frame. Number 4, entry candle, which is obviously taken off of our trigger chart, must be in the cradle zone. Is it there or is it not? Your choice. Number 5, a candle that is small must be present in the cradle zone, either bullish or bearish, depending on trend direction. Is it or not? Number 6, trigger chart is converging. Now I'm going to give you a moment on that. I'm not going to say anything more. I so want to, but I'm not. Use your finger or your mouse to look at the lows and the lows. And number 7, is there anything in the way of our achieving 1-to-1? And I can tell you now, there's nothing there. Now, my final question is this. Does this fit the rules or not? In your eyes, because don't forget, it's okay if you say no and I say yes, or I say no and you say yes, we'll work out why, and I'll show you why. But I need an answer. Does this fit the rules or does it not? All right. Some are unsure. It's a bit of a mixed bag, and that's fine. It's meant to be. All right, so let me take you through this, right? Rule number 1. Price trending on trigger chart. Yep. We've got a downtrend. So trigger chart trending, next high time frame. It's a low. There is a low, because you got to look. That's our low. That's our new lower low, which means that one and that one. So yes, we've got that. Okay, number 2. Moving averages in the correct order on the trigger chart, the 10, because we're looking at a short here, market moving lower, they are in the correct order. Tick. Number 3, moving averages must be in the correct order on the next high time frame, which is here, which we can also tick. Number 4, entry candle must be in the cradle zone. Yep, we've got that there. We can then go ahead and tick 4. Number 5, a cradle that is small, it's not a big dog, it fits. It's number 5, ticked. That's what we're talking about, that candle, that red candle, the right hand side of the chart. Number 6, this is where you would have got caught up, I would suspect. Am I right? For those that said no, is this where you got caught? Rule 6. If it's a different rule, please let me know. I need to know if it was a different rule. Okay, it looks like most people are saying yes. Yeah, and look, that's fair. I totally get it, because it is complicated. It's not as clean cut, right? And that's the whole point around the fundamental law of trading my strategies, is that if it's not clear to you, not me, because I don't matter, I'm trading anyway. It's what's clear to you. Now, let me mark in this trend, because trend tells us convergence or divergence. Now, come on, there we go. Come on. So now that I've drawn that in, we're looking at the last 2 lows. There's a low there, and that becomes a low there, doesn't it? So what I've got to do is this. And remember, part 2, MACD in detail, slide, I can't remember, 32 or something like that, right? If you can't see it as clearly on the 240, we can jump down the time frame to the 120 to get us that clarity. Remember? Now, I'm not suggesting that you've got it wrong if you were confused on this. Not at all. You've got it absolutely right. Because if you're confused, it doesn't make a difference whether I am not or you are. I will tell you right now, it is convergent. I will also tell you right now, by the way, so before I say the next one, can you see with my lines drawn like that, that yes, it is convergent? That's the first question I have to ask you. Okay, cool. If not, please voice it. Like I'm. Don't forget, I'm only one dude trying to help you guys out. So I you know, I make mistakes too. I got to clarify things if I need to. Okay, and I'm happy to do it. But when we look at this, and you go, well, I'm not so sure about this one, Craig. You're also right. I know, with my experience, they're the lows. But if your level of experience of right now is that, oh, I don't really know, then there's no trade. And if that was your decision, then I stand with you. as that being the right decision, because you're going to see some examples in a moment when we get to the bit where I normally do this whole walkthrough, and I do the walkthrough at this bit, then you're going to do it by yourself. Okay, there will be examples that you just go, oh, that was pretty easy, because it's perfection. Like the example we showed before on Binance, it was obvious because it was so clear and so obvious. Now, guess what? I want you focused on those charts. I don't want you nickel and diming down on this stuff if you can't see it, because that's just going to cause you analysis paralysis. It's going to knock your confidence. It's not going to give you that decisiveness that you need. Yeah. So it's okay if you didn't see it. I'm ticking 6. Anyway, I don't need to go back again because that was that one done. Does that make sense? Is there a correlation between ones that look easy and profits? I'd say yes, mate. And it is for me, but I also have to be also very cognizant of the fact that I've been doing this same strategy for a good at least 10 years. So what I can't say is that all the other elements that I've learned, that I've brought to the table, and my experience and my knowledge and all that, I can't say that doesn't also come into the fact that, yeah, the clearer ones often are more profitable. I try myself personally to trade the best standout trades I can possibly find. Now, I know, because I've got clients that have me, like I'm their mentor. I've got students that I've decided that I bring into my team, and I mentor them. Now, I know that a large portion of those traders are returning percentage returns far greater than mine, far greater. But that's okay, because they're trading some of the setups that I wouldn't take. But that's okay also. What they've done, that's why I never show my trading results, because what's my results got to do with you? If you can't work out that I know how to trade with all the stuff that I put out there, that I actually am genuinely know what I'm bloody talking about, then we're not right anyway, right? I don't want to put a glass ceiling on people. You know what I mean? So for me, I trade my way, my style, where I am in my life right now, running this business, raising 2 children, all that shit that goes on with life. Now, I can tell you right now, when I was in my, it was 26, 27, 28, 29, even 30, I was so much more aggressive, so much more aggressive. Nowadays, my time is spent taking fewer trades with higher probabilities. I might end up with less percentage gains than other people, but I don't mind, because I'm working on a decent sized balance. I don't need 10, 15, 20 trades in a month. I mean, look, I'm probably going to get them anyway. I don't need 30 trades in a month, for example. And the quality of the trade does not reflect on the potential for the reward. The market itself is what gives us the reward. Because like on Saturday, Sunday, I didn't do much trading, but I tell you what, when I did, I came in, I was Johnny on the spot. There were some absolute doozies. Again, watch that gate video tonight when you get off of this. You'll see some of those trades that set up. You'll recognize these rules. By the way, while I'm waffling on, take this screenshot, please. And you'll see them, and you'll be able to just pause and go through those rules, and you'll see there's perfection there. And there's a lot of money to be made over the weekend, a ton of money. I was knackered. I wasn't well. I don't actually have the link to the video, but like I say, if you go to the Gate YouTube, you'll find it. If you go to their Twitter, you'll find it. If you have any issues around that and you still can't find it, go to TraderCobb.com, and I'll make sure that my staff are equipped to give you the link. Have you all taken this screenshot, by the way? All right, beauty. Now, one thing I'll stress to you is this, guys. With this particular screenshot, with these bonus factors, this is not what I want you to analyze as much as the essentials. Okay, you know all of these things, and I'll prove it to you in just a moment. But if you can get the essentials right, all of this stuff is just within arm's length of the essentials anyway. For example, price pulls back into support or resistance. We already know that, and I've got a screenshot next to show you what that looks like as a reminder. Breakout on lower time frames. Look, it's a bonus factor. That means that there's got to be at least 2 tests of resistance or support around that level, whether long or short. Multiple cradle trades having worked in current time frame and trend. That's just a bit of a look. Again, as I say, it's a bonus factor. It doesn't mean it makes the trade any stronger or worse. This is a measure. This is a system of measurement. Price pulling back into a round number: 10,000, 1,000, 200, $10. Trigger chart converge. Actually, I've brought that forward so I can get rid of that in the bonus factors, because that's obviously one of our rules. Rule 5 in the essentials now. 2 higher time frames are convergent. So if I'm trading on the 4-hour, I want the 8 and the 16, right, or the 8 and the daily converging. Daily in agreement with trend. You know that. Convergent. All you got to do is check the next 2 higher time frames. Moving averages in correct order on all time frames. As in, if you're on the 4, you want to go 8 and you move up higher to the daily. You know all this. Early pullback in a new trend. I'll explain that to you in a moment. And in the cradle zone on all time frames. Unlikely only on the higher time frames that we're going to trade. So the cradle bonus factors are just, as I say, an extension of the essentials. It's just on a different multiple. Does that make sense? We're not having to learn anything new. We're just using this as an additional measure of allocation process, as in what am I going to allocate my capital towards? And then after that, it's going to be the risk management side that's going to help that as well. You're not silly, sorry I'm silly, but with 7, does it matter what time of day you trade? Nope. Nope, the daily is just whatever's on the chart, right? So when we come to 7, daily in agreement with trade direction. If I'm looking to go long on the 1 hour, for example, is the daily also in an uptrend? It's as simple as that. Doesn't matter the time of day, because the daily trend is set over weeks usually. It comes back to, is there higher lows, higher highs? Simplify that. Okay, so let's go through. The most, and as I say, with the essentials, I've put it in the order of which is of most importance to help you to eliminate more charts faster, so it saves you time. When it comes to the bonus factors, my favorite is number 1. Everything else, I don't score it any higher. It's just, for me, if I can have price pulling back into an old level, support or resistance, it's a strong sign. It's the sort of trade that I really want to take. Everything else falls exactly the same. You wouldn't score it any differently, but that's the big dog for me when it comes to the bonus factors. It wouldn't stop me from taking a trade if I didn't have it coming back and retesting like in this case, but it certainly adds. It adds a lot of value. Why? Because of that trampoline theory I've been talking about. It just gives us an additional reason for price to go bang or down, you know? Price testing a round number, and of course you can see here the number is $10.19, but the low of these candles, look, that's bang on $10. $10, that's a round number. Now don't pay any attention to this, because that's not what's relevant. The relevance is the round number. Okay, it's just a psychological level. Again, less is more. Keep it simple. We'll move on. In this example of a downtrend, you've got 2 factors coming together. You've got old support, test 1, test 2. Price has pulled back in. It's now acted as resistance. Well, guess what? There's also 11,000. We've got a round number, tick that bonus factor. We've got the king daddy of all the bonus factors, old support becoming resistance. Now we've got 2 bonus factors. Again, if ever you're feeling confused, 2 things. If it's not clear, it's not there. Well, 3 things. If it's not clear, it's not there. Follow your checklist individually, and don't try and overcomplicate each rule. If you go through each of the rules one at a time, so don't. I mean, I do this still. I'll look at the trade and go, that looks fantastic, excellent. I'll still go back to, that's why I've got them on hand, right? That's why I've got them on hand, because even with all my years of experience, I know that I'm not always right. Don't leave it to chance. Don't leave it to me having a bad day. Let the market show me what's going on. Follow those bloody rules, Craig, because I know I've raised a family on these freaking things. Don't outsmart yourself. You'll jinx yourself, right? Again, old resistance, price pulling back in. My favorite bonus factor. Again, another example. Don't need too many. That one's a bit crap, to be fair, as opposed to the other one. Oh, I've already done that one. I've got to get rid of that. We've already done that. Righto. Now, here's how this works. You all got your checklist? Because I'm not going to help you at all. I'm not helping at all. I'll come back through at the end when I've got your answer. I don't need you to tell me yes for each tick box. And if you don't want to focus in, if you go through the essential factors and I'm not talking yet to talk you through the trade, by all means, go to the bonus factors. What I'm going to do is this. I'm going to go, this is our trigger chart. So the first chart's our trigger chart. So I will put a big fat T, so you know. The next high time frame is our 2-day. Now we've only got 2 in this particular example. That's okay. We can work with that because that's all we really need. So I'm going to start here. Well, you're going to start here on the 1-day chart. You're going to go through your essential factors, and after a little while, I'll click over to the 2 so that you can make it clear to answer your questions as need be. Then I'm going to flick back, and I'll do that a couple of times. I'm going to give you a couple of minutes, but you're on your own here, Charlie Brown. I'm going to mute myself, and it's up to you. Go get them. Don't forget, checklist, read each line. Do not overcomplicate this. Read each line. You know this. You've learnt this. You can do this. Focus. Don't overcomplicate. Read it rule for rule. Tick them off, and I'll show you how simple this can really be. Over to you. I'll give you another 30 seconds or so, and then we'll go through it. I want to know what you take it. I'll ask the question when it's time. Back to you. All right, let's do this. My question is this: does it fit the essential rules? Yes or no? Pretty simple, isn't it? Simple doesn't mean easy. There's a process to be followed. The part that makes it easier is the process that we've got, the process that I've provided for you, the way you've learned, and the checklist. There's a lot more to learn. Don't feel like just because you got the strategy, you got this thing nailed. There's a lot more to it. I will tell you that, okay? We cover that in part 4. But as far as the strategy goes, it's not all that difficult. Yeah, I can understand that those people that are on their iPads and whatnot, it's a little bit more difficult. I do understand that. This will be up tomorrow as a recording as well. Confused by the extent of sideways consolidation. I think what you've done there is you might have just overcomplicated something, because in none of the 8 rules, and this is not to take the piss or to talk down to you, nothing says about anything about sideways consolidation. So what we're doing here is we're literally just going through the process of the rules. Now, let me just show you this, right? And I'll go through these with you. Where's my pencil thing gone? Here. What we're looking at is this, and I can understand somewhat, maybe some people are a little bit confused on the trend, because let's be honest, it does this. Oh, for goodness me. Right? There's definitely a consolidation period between here and here, isn't there? Absolutely. I couldn't agree more. Could not agree more. What we see is we have a low and a lower high, because it didn't break that, did it? Then we have a higher low and a slightly higher high, but then we have a higher, you know, even if it's not a higher low, let me redo that. Let's do the most recent. Let's go here, here. Oh, sorry, I cocked it up again. Here, and let's just go straight up. We have a higher low and we have a higher high. That's all we need for an uptrend. Don't forget that. That's all we need. So rule number one, price must be trending on the trigger chart and the next higher time frame. So do we have a trend? The answer is yes, and the answer is up. The next higher time frame, do we have it? Something like that, or even if you went like, if you went like this, you've got a higher low here. 2 candles pulling back to a higher high. So yes, both time frames are trending, and they're both in agreement. Moving averages must be in the correct order on the trigger chart. Well, we know that the 10 is above the 20. Moving averages must be in the correct order on the next high time frame. 10 is above the 20. We can see that. It's relatively straightforward, that stuff. Let me just get rid of all this hoo-ha. Entry candle must be in the cradle zone. It's right smack bang in the middle. Yeah, in between the 10 and 20. It's beautiful. Yep, we can tick that one. Candle must be small. Is that candle a big dog? Absolutely not. That is about as sexy as a candle gets when it comes to pulling back. Trigger chart is converging. So we look at this high, let's say. Boom, 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 here to this high. Definitely. We're definitely converging. Nothing in the way of achieving our one-to-one. I can't see anything there. Entry will be when the next candle opens to break the high of that candle with a stop underneath the low. Now, if we want to look at bonus factors, I want to focus simply on the first bonus factor. And admittedly, it is rather hard without a crosshair. The cradle zone for visual? Yeah, absolutely. It's when it comes back in and around that 10 and 20. So it's touched the 10 there, it's in around here, but it's nicely nestled straight back in the middle of both the 10 and 20. That's exactly where it just makes it really clear for me. And again, practice makes perfect. Watching more of the content that I produce, watching the gate stuff that I produce, you'll get the feel for what I mean by that cradle zone, because limited examples, obviously, when it comes to the course, but there's a lot more follow-up that I do on everything else that will make that a lot more simplified. Now, coming to rule number one of the bonus factors, old level of resistance becoming support. Now, I can't draw it. Oh, I was about to say I can't draw it very well. It should be lower than that, but that's about as good a horizontal as it's going to get on a drawing tool like I've got. So I'm going to pat myself on the back for that. It needs to be a little bit lower to roughly take in here. I know it's a B's dick there and through here as well, and price has come back to retest that. So we have one of those bonus factors there also. Now this was relatively clear. Trend, I can understand how maybe this bit here might have caught some people out, but it's relatively clear. Let's go on to the next example. We do have a few of them. You know the drill. You know, question, do you ever take into account the number of candles between the final higher high in the trend and the entry candle? No, I don't. I don't. And these are good questions, because these are points of which, and look, I'm not an idiot. I've taught thousands of people, right? I've done this for a long time. I used to do this in other markets before I came and exclusively worked in crypto. And the reason I did it was because there wasn't anything that I could find that was of quality, and I saw a gap in the market, and that's why I started the business. But no, these additional questions, as much as I want to see them, I also want to bring it back. And I just want to say, bring it back and focus on what is. If there was an importance on anything else that was of significance to this particular trading strategy, I would have told you. And again, I'm not saying that to not encourage you to ask these questions. I just want to make it very clear. I'm literally holding nothing back on this strategy. This is everything, the whole lot. I don't care if, and I got asked this question to my members the other day, because Ethereum, Bitcoin on a downtrend pulse, it just one candle, bang, it's actually in a downtrend, and then there was a perfect cradle, and then they're like, well, it's only one candle, so do you care? I said, no. And sure enough, it turned out to be a profit. I don't care if it takes a while to pull back, like it does sometimes here or here or over here, or if it's whack, one candle in. Doesn't make a lick of difference to me. The fact is, where is the price? What is the trend? And does it fit these structured and relatively straightforward rules? So on that, I'm going to do the same as what we did before. You get your checklist out. We're going to be on 1 day for a bit. Show you the 2 day. There it is. do your thing. I'll jump back to the one. Where are we? There we go. I'm going to mute myself for a couple. Take over. All right, 30 more seconds and we'll go through it. I think that's about 30 seconds, isn't it? Does it fit the rules? Your essentials are the most important. Does it fit the essential rules, yes or no? Don't be shy. Paul, yes. Well done. Okay, great. Steve, Ken Oath, I'm with you on that one. Okay. This is what I love. I'm hoping you're starting to feel a bit more empowered, right? You know how to make your own decisions. All right. You know how to make your own decisions, because I did not make these decisions for you. You made them. You just followed a process. This is what this is all about. Let's go through it. Price must be trending on the trigger chart. Now, this is our trigger chart as I think we've all sort of gathered. Oh, you stupid. Oh, this happens every time. I got to get better at learning how to use this bloody drawing tool. That's our trigger chart. So yes, is it trending? Absolutely. Is the next higher time frame trending? You little ripper. Yes, we have an uptrend there as well. Rule number 2, moving averages must be in the correct order on the trigger chart. Yes, 10s above the 20, and on the next higher time frame is a 10 above the 20. Well, what do you know? It certainly is. So now on to rule number 4. We've ticked all first 3 halfway. Well, we're more than halfway through in that sense, because they're the 3 biggest factors. Entry candle must be in the cradle zone. Yep, it's like the last one. Smack bang in that cradle zone, tick number 4. 5, a cradle that is small must be present in the cradle zone, either bullish or bearish, depending on the trend. Is that a big dog? I don't think it's a big dog. The red candle, that's a bloody big dog. That green one, it's not small, it's not tiny, but it's fine. It's okay. It fits the rules. We're good to go. All right. Trigger chart converging. Well, we're going to look at the last two highs, and let's go all the way back here. Yep, it's a high. Tick that one. Now, we can't see anything in the way, right? I personally can't see any resistance. The chart has nothing there to represent any resistance. We're good. Entry as it breaks the high of this candle on the next candle. Process-driven trading. It will make your life so much easier. Now, here's a flipper. The flipper, a warning special. If you're not Australian, you're going. If you're not Australian, English, Indian, Pakistani, South African, you'll be going, or Kiwi, you'll be going, what is this lunatic talking about? Don't worry. You know the gig, right? 4 hour, 8 hour, and I've thrown in the 16 here, an additional time frame. So at this stage, I hope you know what to do. Go get stuck in. Over to you. Sorry, I'll also add on this one. If you've gone through your essentials relatively quickly, please do go through your bonus factors at the same time, because as you do more of this, it does come quicker. So please do work those bonus factors as well. All right, let's do this. Do you like it? What percentage do I short? 1% of my portfolio. So because we're looking at margin to go short, it's 1%. So if I've got a 10,000 account, I'm risking $100. I've got a 100,000 account, I'm risking $1,000. Of course, when you start, reduce whatever the amount you've got to a lesser multiple. So I'll ask the question again. Do we like it or not? Does it fit the rules or not? Shouldn't be like, I should say, does it fit the rules or not? Yes or no? Anyone find any bonus factors? If you did, tell me what. Well done, Paul. What else? There should be two that should be relatively clear if we're, what's the word I'm trying to say? If we're paying attention. Haven't got all night if you don't come in. All right, multiple cradles, we'll look at that. All right, let me take you through this. I'll point out the obvious, right? Or what I see to be the obvious. First things first, price must be trending on the trigger chart and the next high time frame. Lower high, lower low, downtrend. Yep. Next high time frame, same thing. Yep. We're good. The 16 hours also there doesn't really come into our factors just yet. So we're ticking number 1, 2. Moving averages must be in the correct order on the trigger chart. 10 below the 20. Beautiful. Number 3. Same thing. In the correct order on the next high time frame. Yes, they are. Sorry. Entry candle must be in the cradle zone. Is it? Yeah, it is. It's that red candle right there. Don't forget, we're looking to go short. Remember the understanding of the candle. It's saying that price at one stage, it was a pretty decent green candle. It got driven back down. It's now bearish because of the journey that the candle took to get where it is. Good as gold. A small candle in a downtrend. Is that a big dog? Nah, it's not a big dog. That's fine. Good as gold. Love it. Is the trigger chart converging? Now we're going to look at the lows between here, 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 and here. Bingo. Bingo. Lower low. Yep. So we're converging on the MACD. Happy, happy, happy. Now, nothing in the way of achieving 1-to-1. I don't see anything there. So again, we can tick that one. Bonus factor time. Let's see how good I am at this. Shoop. Bad. I'm bad. Very bad. But you can see what I'm looking at there. I'll try again one more time. Still pretty bad, but you get the point. What else? No one said that. So we've got the first rule of bonus factors. Price retesting an old level of support acting as resistance. We've got that, but nobody said, I don't think anyway. I don't think anybody said the round number. Let's have a look. No, nobody said it. As far as cradle trades working out, well, the problem that we've got here is that this is really the first opportunity, isn't it? Because look, come on, come on, come on, give me the little drawing thing, the little red dot. How do I get it? Do I press the button? No, that's not what I do. There we go. This is actually the first pullback. Now, the first pullback is what I consider rule number 9 in bonus factors, early pullback in a new trend. We've also got rule number 8, moving averages in correct order on all time frames. Correct order on the 4, correct order on the 8, correct order on the 16. These are all the time frames that we have. So we've got a bonus factor there as well. So we've got a couple of bonus factors in this particular example. Now, before I go any further, I want to ask you this. How'd you find it? Genuinely, has it come together? Has everything thus far started to make sense? Were you able to understand it? Were you able to take the learnings from the last 2 weeks and put it into practice and get yourself into a position where you feel like you can actually do this? Great. That's it. The next step is do it in practice and fuck it up. Again, excuse my French. Yeah, that's the idea. You've got to make mistakes. And the only way you know you've made mistakes is by someone pointing them out to you, or by you pointing them out to you by taking your screenshots, which will all be covered in part 4. Now, do not feel like, I mean, look, I am all for you feeling empowered. I'm all for you feeling good about understanding the fundamentals to take trades that fit the Cradle rules. I know that you can do that. There is more to it than that, and I will continue to say that because as I said, I'm a trader, I'm an educator, and I understand that you are going to overcomplicate some of these things. You are going to get in your own mind, and that's what part 4 is all about. But before we get to that section, I want to start the tap. Oh, quick question. I think you just need one more screenshot after the example of what actually happens. No, the reason I don't have that, Mr. Mortimer, is quite simply because I don't want you to, the reason I do it, if I was to show the example, and let's say one trade was a winner and one trade was a loser, what we tend to do as human beings in our behavioral patterns is we'll try and find something wrong with the losing trade, but we'll accept the winner. And I don't want that to occur, because that shouldn't be how you view a trade. And I'm not suggesting that you'll consciously do that, but unconsciously you probably will. And that's the reason why I don't have the after screenshot. It doesn't matter the return on the trade. It doesn't matter it was a profit. I can tell you the Litecoin Bitcoin trade, I can tell you right now, that was a losing trade. That was my first trade of 2019. Perfect setup, losing trade. The Binance trade was a profit. I can tell you right now, the last one, the Bitcoin short, this one, off 11,000, this was a profit. I remember it very, very well, because I speak with my clients and the people in my community that are there watching what we're doing, and we work together each day. And whenever I go away, I tell them, because whenever I go away, something happens. And I had to go to Penrith to do a presentation this night, and I waited for this for a very long time, for this exact trade. I'd stalked this for a couple of days, and it's set up. And as I was doing a live presentation looking at the charts, it triggered, which meant I couldn't take the trade because I was presenting, not trading. This one worked out very well. I took the next one, which was pretty much an identical setup of a 10,000. I took that one, and that was a losing trade. So the outcomes, they don't factor in as much as you might think they do in a learning environment. They shouldn't affect the way you see the market, because a good trade can be a losing trade, and a bad trade can be a winning trade. And that's the reason I don't put the aftershot in there, if that was to your question or to your statement. Okay, understanding risk and money management. Do I need to manage risk? Well, trade identification is not the main part here, guys. Modifying your strategies, don't change anything. Okay, that's the best way to find yourself on that was a Ralph's little wheel of doom, you know, is by just chasing and chasing and never focusing on you becoming better and playing the blame game. All right, you're going to have losing trades, you're going to have winning trades. We did a coin flip in part one, which was to understand probabilities. You might have a number of, heads that land in a row, and you'll lose on 8 times in a row. But we know that the probability is stacked in our favor. It's simple coin toss. You're going to come back to that equilibrium, which is 50-50. We know that, right? So we just got to keep focusing on doing the right thing. Good traders focus on doing what good traders do, and that is not being flippant. Successful traders develop an effective risk management strategy that protects our capitals, because like I said, if you're somebody who sells cars for a living, you have a car yard. Without any cars, you have a yard. If you're a trader without any capital, you're playing video games. Don't do it. We need to manage our risk, because it ensures that we've always got cars in the car yard. We can always conduct our business operations. If we don't manage our risk, let's say we don't manage our risk and we do 600%, we take 10,000 and make it 60,000 in a short period of time. I'll just about guarantee you, as fast as you made it, you're going to lose it, because you do not have a stringent plan in place. You got lucky. All right. Having a business is not about getting lucky. Sure. Ask the people that run Zoom. They got lucky. A pandemic hit right around the time where we all needed to have video transmission to each other in business. That really blew that business up, but it wasn't luck. They were in the right place at the right time, and those that do the right thing tend to find themselves in the right place at the right time. And others might say, geez, you got lucky. It's not luck. You got to have a structure, otherwise it falls apart very, very quickly. So formulating our trading income, and I want to make sure that you are very, very, very aware that this is just purely to illustrate a point. This is not any scientific research. It's based on simplifying a process to understand the importance of that unified management of risk. So in this particular example, we're going to look at 100 trades per year, or 100. It doesn't even have to be per year. We're going to go per year. We're going to give it 100 trades, and we're going to look at a year. Out of 100 trades, 45 of those trades are making a profit. So our win-loss ratio is pretty shit. 55% of the times we're going to lose. All right. Based on this, 15 of those trades will move in profit immediately, and they'll never look back. These are what we call the runners, when it just goes bam, and you go, oh, sweet as. And all you got to do is, as it pulls back, trail your stop. And okay, again, we cover that. We'll look at how we can manage our trades and positions. Those runners tend to, or often will, if not be all your profits, will be a significant part of those profits for your year. That means there's 30 winning trades left that need to cover the 55 losing trades. This, again, is just simple math. Okay. Now, from there, this means that we need, it's actually 1.8 to 1 on the rest of the winning trades as an average. Some trades will be a full, some trades will be break even. Some trades you'll get a couple of percent out of, 3%, 4%. Some trades you'll get your 1.8. But as a generalization, to illustrate a point, those next 30 winning trades need to cover the loss of those 55 losers to make sure that the runners are in fact our profits for the year. Now, if you're not managing your risk accordingly and uniforming the management of that risk, as in 1% of your account, you're not going to have that because you do not know what trade's going to be a winner. It does not matter that the trade fits all the essentials and all the bonus factors, and you've stalked it for a week and it's pulled back and it's done everything that you could have possibly hoped for. Just because it looks fantastic to you doesn't mean the market's going to move in your favor. This is a game of probabilities, not a game of I know what's best. You got to look at each trade as one trade within that 100. And if we execute flawlessly, then these probabilities can play out in our favor. And again, I will stress that I'm not suggesting that this is how your trading is going to look. It is purely to illustrate the importance of risk management. So let's keep going with this 100 trades, 45 of these trades being winners. Now we're talking about a $10,000 account here. So I want to make that very clear, 10,000. Oops. Which means that our risk equals 100 because that is 1% of 10,000. Okay. Now, the 15 big wins that we're talking about a multiple return of 25 to 1, which when you scale out means you need to effectively get yourself 49 times your risk multiple because you are minimizing your risk by taking half the trade off at the first target. Now you might go, gee whiz, that's 50 times. So if you're risking $50, it's got to go 50 times that multiple. Wow, that's, in actual fact, this is the beauty of crypto and why I'm in it. You get that? There's been a couple this year already, and we haven't really got started. This has been a slow year. There was trades like that. There was plenty of them in 2018, but they came, yes, it was 18. That breakdown through 6,000 provided some absolute doozies. 2-hour chart, Cradle, 5,750, I think was the level with I think it was a $70 stop, and we saw a couple of $1,000 move. Big profits happen quick, all right? So they do occur. So don't think this is pie in the sky stuff. It is not. Don't forget, we're not looking for it to do a 50x. We're looking for it to 50 times the size of the position. So if we're risking 10 bucks, it moves 5,000. Sorry, hang on, 500. The 30 small wins at $184, obviously, that's 1.84 times our risk multiple. So $184, obviously, is 1.84. That nets us 550. The other 55 losing trades at 100 is 5,500. Now, again, this is purely to illustrate a point, because if you're risking $10,000, sorry, if you've got an account of $10,000, and let's say you hold it all in Bitcoin or Ethereum or whatever, if you have, let me just get rid of this for a second. If one of your first trades is that, then you're now not trading off at 10,000, you're trading off at 12,500. So your next trade is $125 risk, right? So it's going to swing around. As your account goes up, your 1% will also increase, so you're compounding. As the account goes down, you're also decreasing on that loss. Does that make sense before I go any further? 1% is 1% of the account value. If you go from 10,000 to 9,900, you go from 100 risk to 99 risk. It's allowing you to grow or shrink your account based on the success of your trading. You earn the right to build that account based on good trading. So now we've got that under control. We know that it's not going to always be 55 losses at 100. It's not always going to be 184. It's not always going to be 2,500 on your wins. It is going to be a mishmash of all of the above. But again, to illustrate the point, I know I say this 1,000 times, but I need to because I don't want to give you the wrong message. When we have these numbers set out the way we do, our $5,500 loss is covered by our $5,500 wins by our 30 small trades. It's our big trades, our big winners that ends up being our annual profit. Now, can you see this potentially available for you as somebody who's trading from a $10,000 account? I can tell you now, it's tough as nails when the market does jack all. When it goes sideways, we've had a lot of sideways periods. We are not in a sideways period right now. We're in a period of time that, in my view, I've been waiting for this since basically, March, when I was in New York of 2018, when the price was still pulling back from 20,000. It's finally here, guys. For you to be with me right now at this moment in time is absolutely fortuitous for you. It is the best time in the world to be involved in learning this shit. And I'm telling you, I am more excited than you can possibly imagine, because I know the sorts of returns that I'm going to be able to get if we continue to see a strong market, and I am seeing all the signs of this market continuing to be strong. Now, it's not going to go up in a straight line, and we don't want it to. Why? Because the cradle needs pullbacks, right? We need that. But this is to illustrate the point of importance of having a unified approach to risk. Have I made that clear? Fingers crossed, Craig. Fingers crossed. Hope I say yes. Indeedy. Oh, good. Right. Do I need to manage risk? Well, the answer is a yes. It's as simple as that. You got to manage your risk. You got to assess your risk each trade. Do you scale out or do you not scale out? We'll cover that in a moment. You got to manage losing streaks, compounding on your winners and losers, which is the 1% rule. So that's what that does. It does it automatically. And setting a trailing stop loss. These are all the elements of risk management, and we're going to go through those as well in part 4 in a lot more detail. Now, what I want you to do is this. I want you to take a screenshot of this slide, please. All right. The reason I want you to take this is trading. If you can nail these 4 points, you'll have success, and it will be something you can replicate for the rest of your life. You can teach your kids, your grandkids, your mates, don't matter. This is what it's all about. You got to identify the trade. You got to manage that risk. You got to have that process to follow, so you don't have to think anymore. You're a robot, and you got to keep that mindset cool. Now, I didn't feel well today. I've had a pretty rough weekend health-wise. I just didn't feel good. I was sick, so I didn't take any trades today because I know I wasn't in the right mindset for me to do so. You've got to be in control of every step, and that's why there's a checklist for everything. That's why there's planning for everything. Are any of these more important than the other? And that's what we're going to right now. What's most important? Well, I can tell you right now, most traders will suggest that the least important bit is actually finding the trade. Sorry, that was the easy bit. This bit is probably 20 to 30% of what you actually need. I'd say 20 to 30. We say about 15%. I say it's a bit higher than that, to be fair, reality-wise, yeah. Problem is, most people think that finding the trade is the most important thing, and they let their brain get in the way of their success. They look for the perfect trade all the time. And like I said to you earlier in the piece, I said, don't worry about taking the perfect trade. Minimize your risk and just start trading. Start trading, start getting in the game, start making mistakes, start learning, but do it with a small amount. If you know you're not going to hit the ground as an absolute expert, then why go and risk it all? Your first time you jump out of an aeroplane, you don't jump by yourself with a chute. You got to do 50 jumps or whatever it is with someone strapped to you before you're allowed to take your first jump. Well, this is equally as important as far as I'm concerned when it comes to this profession anyway. learn, earn, grow. The novice trader discovers a new trading strategy. So this is going back to Ralph's cycle of doom, or circle cycle, whatever. They got a new strategy. Go, yeah, beauty. This looks great. I can do this. So putting yourself in this person's shoes, and I'll show you how easy it can be to get sucked into this. I know how to do this now, Craig. You just taught me. Thanks. That was great. I'll go and trade now. It works a while, and they go, oh, I start having some losing trades. And they try and adjust the strategy. Maybe if I throw in some Bollinger Bands, or maybe if I put in the RSI, or maybe if I mix what this person said and what that person said and what this person said, maybe that'll work. Meanwhile, they keep hemorrhaging money. They go, this strategy doesn't work. I'm going for the next one. That'd be like going and buying a brand new car for it'd be like getting into an F1, right? Most people that are listening to this can probably drive, but can we drive an F1 car? I'd say that just about all of us can't. Some of you might be really good drivers, and you might be racers or whatever, but most people can't. Does that mean that the car's rubbish? No. You don't throw the F1 car out. You go and throw Lewis Hamilton out, and look at this guy crack around the course. Sorry, around the circuit. It's not the tool. It's the person that's managing and running that tool. You throw me into an airplane right now and sit me in the cockpit, I'm not going to know what the bloody hell to do. It doesn't mean the plane won't fly. It means that I don't know what I'm doing. Now, pilots tend to make very, very good traders because they are so used to going through a checklist process. Imagine spending 45 years of your career going through the same checklist, but do you ever not go through it? No, because by law, you have got to go through it, because you can't afford to just land some of the time. Yeah, you got to land all the time, and land wheels first, not nose first, wing first, tail first. There is a process that needs to be followed, and it is important that you understand that. This strategy does work. This strategy can make you a lot of money. You are what stands between this strategy and your success. It's you. Accountability is so important. Sorry, I thought I already shown this. I've been talking to Ralph on the cycle of doom, sorry, but here he is. Look at him go, little rat Ralph. Yay, righto. So how do you avoid being stuck in this cycle? You got to have confidence in your strategy. Now, that can be the tricky part. We've spent a fair bit of time together now. If you watch more of my content online, you go to my website, you go to my YouTube. It's all just under the banner TraderCobb. Very simple. If you haven't seen what that looks like, it's down here, righto? So what you want to do is you want to embed yourself in, like, what's the word called? I can't think of it. You want to be involved with the same methodology. That will help your confidence. You gain this by starting by trading small amounts, obtaining a strategy from someone you trust. I hope that trust factor has been built. I've been doing my best to do so. Communicate others who are having success using the same strategy and who are learning. Success for me at these early stages is about learning. People complain when they're at break even. That's such an important place to be, because if you're breaking even, it shows me that you can trade. It shows me that you can manage risk. It shows me you can follow rules, unless you're just pissing in the wind and just getting lucky. Communicate, learn, and grow. A loss is not a failure of the strategy. It's part of the normal process. I have losing trades. I had 3 losing trades in a row up until last week, and the profits that I got from the trades last week absolutely blitzed the losses that I'd made in those 3 trades. And I don't often have 3 losing trades in a row. Like I said earlier, I'm not as aggressive as I used to be. I don't take as many trades. So when I take them, I expect to make money. Doesn't mean I'll make money, but I go into the trade with that level of certainty. This is a great trade, whatever happens, it's out of my control now. I've done my job. I don't know what trade's going to be a winner. I don't know what trade's going to be a loser. I don't know what trade's going to go moon and make me a ton of money, or tank and make me a ton of money. I just don't know. My objective is to be in the game when the game offers the rules that I am willing to play that game for. You're not going to go into a boxing match if you're a, whatever they're called, like a lightweight against a heavyweight. Well, because that's not part of my rules. I'm not doing that. Same thing with your trading. Methods to manage a winning trade: price, targets, and trailing stops. 2 methods to manage your winning trades. A trailing stop allows your winners to lock in profit as they go. A trailing stop is not an automated trailing stop, by the way. It's based on your reason for entering. And let me explain that to you in this way. If I've entered this candle down here, entry here, excuse me, stop loss here, and I've done it because of this. It's pulled back into the cradle zone. I'm entering as it's broken here, and then it does this. Cool, I've hit my 1-to-1, I'm risk-free. Then it does this. Well, this is now the new higher low, right? So if my stop loss was aimed at being the new higher low, it's been confirmed with a higher high. So as I've got a higher low, well, my stop loss now comes up to here and I lock in all that profit. Same again. Keep following it until you get taken out. Where should you be taken out? You should be taken out on that reversal of trend. There's a lot more detail that we'll go into on that. I believe we do that next week. There's a lot of stuff online that I can show you as well that's already there. It's all free. It's on my YouTube and on my website. The way that we do this is by working on both methods, targets and trails. Now you are going to have trades that do this. They just go straight up in the air and you go, man, my entry and stop loss are down here. What do I do? That's a bloody good place to be. You've got no place to trail your stop logically based on understanding of charts. This is where it comes into what's the best worst case scenario for you. Now, I'm not going to go into detail on that just yet because that's something that it comes with time and I don't want to give you too much information that you don't understand. But it's about managing self, locking in profits. So managing a winning trade, let's take a screenshot of this one, please, ladies and gentlemen. So what we're going to do here is we're going to sell 50% or half of our position at 1-to-1. What that means is this. Let's say that this is my entry. This is my stop loss. So I'm going to say E equals, let's say it's 500. My stop loss equals 450. The risk on the trade is 50. That's the distance between my entry and stop loss. So 1-to-1 means whatever the risk multiple is, I add it to my reward. So my first target, or T1, that's going to equal 550. Now let's say that I risk $100 on the distance between my entry and my stop loss. I am risking $100 on the trade. Now I can choose to either split that trade into two or set a target or a take profit order at 550. If the price then gets up to that 550 point, it automatically sells. Yep, I'm sleeping. On that target, I have locked in a profit of $50. Let me get rid of all these to make it clear again. My stop loss is still down here. If the price does this now and stops me out, well, on that half of the trade, I have lost $50 because I took my first profit at 1-to-1, locking in a $50 profit. Then on where my stop loss needs to be, I still had $50 risk because I had no place to move my stop to just yet. So $50 profit minus $50 loss equals a loss of 0. Does that make sense why we do that? It's purely to manage our risk. And as a trader, our job exclusively is to manage our risk. All right. Here's how it looks visually. Entry and stop on the same trade before that I showed you. We've got a risk or stop. So the distance between our entry and our stop is $241. Our entry is this level. Our stop loss is here. That's how we got that number. We add this number, our risk, to our entry. And that number is 4,614. The way that looks, okay, I've got 11 up here, but you can see this is how it looks as a visual. Price does that. We've now got a risk-free trade. And up here, we still have all that profit available. Now, as price does this, we move our stop loss from where it was to where it needs to be. Now, there is going to be more questions about this. You are going to need to develop this skill further. And I got to say that unfortunately, I don't have the ability with what I've got with Gate to go through absolutely every single detail. okay? But you got the beginning part. You got the start, trailing your stop, the one-to-one. Watch that section. Again, it's around the 2-hour mark on this particular presentation. You got it under control. So, again, another example. Entry price 452, stop loss 436. This distance between here and here is our risk. Okay. When your targets hit, depending on how you set the orders up, you may need to just adjust your stop level. If it's a reduce only order, it will be fine. It will be taken care of, but I don't leave anything to chance. If I've gone from having 100 contracts open, I think I one-to-one, and now I've got 50 contracts open, I'm going to change my stop and just make it 50. So there's no area for error. If, let's do this, right? Here's our entry. Here's our stop loss. We've raised the order. The next candle opens and does this. It breaks the stop loss before the entry. That's when you cancel all orders. If it takes out your stop loss before it triggers you in, you don't lose any money because you have to be in before you lose. But you cancel all orders from that moment on. The trade is now redundant. It is I'm lost for words at the moment. It's been disqualified. This one is also important. You trail your stops on a long for higher, sorry, you trail your stop with higher lows for a long and lower highs for a short. Like this. As it trades higher, you move it up, so on and so forth. In a downtrend, stop loss was there, move it to there. We're just using simple trend to make it work. It's logical stuff. It's fairly straightforward. Now, next week, we are going to go into further detail of management of risk, mindset, and progress. We're going to put in place a plan whereby you understand correlated risk, you understand total risk, you understand when to minimize your risk if you are to have a bit of a bad streak. These are the icing on the cake factors that brings everything together. You'll probably need to, at the end of this, bring all your notes, collate them together, and give yourself your own little file of monitoring self. It's incredibly important. It's totally free. The hard bit is that you've got to do it. If you don't do it, you will not learn from it. Okay. Now, as I said, guys, like I'm over time by 10 minutes or whatever it is, right? Or 6 minutes, whatever. I try and jam as much in as I possibly can, but my objective is to help you to understand, not just throw heaps of content at you. From what I've seen from your answers, from what I've seen from how involved you've been, I'm feeling fairly confident that you understand what is required to this point that we're at right now. There is more to do. I would suggest that you go, as I say, follow the Twitter page for Gate, follow TraderCobb Twitter page, follow TraderCobb community, join the community. It's free. There's a free version that's there on Facebook. Go to my website, TraderCobb.com. Got a brand new website there. You can ask questions in the chat box. You can get involved. You can see what else we offer, and just try and work through this strategy. Minimize your risk. Jump into the scan on Wednesday. Be involved. Keep that checklist with you. Guys, has this been good? Has it all come together? I'm very hopeful. It seems like you've been understanding it and going quite well. Fantastic job. Really helped me understand and focus on what matters. Sending positive vibes. Reef. Thanks, mate. Appreciate that. Thank you. Actually, there's a lot of nice comments coming through. I do appreciate it. I do love it. I am passionate about it. And you know what? It's funny. You know, I have been feeling rubbish all day. The second I start presenting, the second I start doing this, no matter what, it's like you get this innate ability to just sort of go, it's game time. I've felt great. I'll probably crash and burn after this, but you know what? For the time being, the time that I've had with you, I've felt bloody good. And you've helped me with that. You've obviously understood it. I appreciate it immensely. Please do fill out that survey. Let me know any feedback. If there's anything that you want to add into that hasn't been asked or whatnot, please do so. I'm more than happy to hear any ways that we can improve. And I'm glad to hear that, that you are getting clearer. There's a lot there. I know, I understand, and that's why the focus now needs to be on just the checklists. Okay, just the checklist. Be on that scan on Wednesday evening. All right, be on it. Be on that scan. Have a great night, afternoon, morning, whatever it is in your part of the world. Make sure you call your mates to make sure they're okay. It's not been an easy year, and if you're not okay, then make sure you call your mates. People are there to help. Let's help each other to make sure that each day we wake up and we are all right. Take care, guys. Love you to death. Thanks very much. Bye for now.